Welcome back, guys. Today we are analyzing Nvidia stock. Now, Nvidia, they design chips. They don't actually manufacture them, they just design them. Their main segment is going to be AI. They also do for gaming and auto as well. So AI is basically their data centers, and that made up 18.4 billion of their revenue last quarter. Gaming only 3 billion, and the rest was pretty insignificant at 700 million. So really, this is an AI company building AI chips, and if that falters, then the entire company falters. The gaming segment hasn't really been growing, and the rest hasn't really been growing a lot either. So let's check out their numbers real quick. Their numbers, you can see their revenue growth going up and up and up. Some years they didn't grow at all, and then some other years they grew by 50%. So it is a cyclical business. I know in here it was because of their gaming products, and that's why they grew so much. And then right now they're growing so much because of their new AI chip. And in terms of their earnings, it translates very well into earnings because they have such high profit margins. But can you really justify this valuation? Probably not. Really, their net income is 30 billion, and their price to earnings ratio is still at 66 with a market cap of 2 trillion, which is bigger than Google, I think. What's Google's market cap? I think it's bigger than Google. Google is at 1.7 trillion. So yeah, this company is bigger than Google. kind of crazy, I think. Now, the other statement, their balance sheet. Their balance sheet, they have zero debt, so very, very good balance sheet. Cash flow is going to look pretty similar to their earnings. And they are also buying back stock for some reason. They bought back almost 10 billion of stock last year and this year, which is pretty crazy at these levels for sure. Now, the big question is, can Nvidia actually continue to grow? And my thought is most likely no, because let's take a look at their use cases for AI. So this is off one of their slides in their company overview, and they are talking about copilots. Well, guess what? We already have copilots, so the real question is, how much better are the new copilots going to be, and are people actually going to pay for them? Next, social media search recommendations. Pretty sure that we already have those as well, and not quite sure how they're going to improve with some faster AI calculations. Next, creators can generate photorealistic images. Once again, we already have that. So the real question is, how much better is it going to get, and are people actually going to pay for it? Once again, call center, we already have AI chatbots, so are they going to get better, and are people going to pay for it? Once again, like all this stuff is, how much better is it going to be because of AI, or because of these new chips that are so much faster, and how much are people actually going to pay to get these things? Because we already have most of this stuff, and that's probably why Nvidia has grown so much in the past, but can they continue to in the future? And I think that is a big question that must be answered. Their 2025 or their 2024 outlook, not quite sure why it says 2025 outlook, unless they're a whole year ahead. But we are in 2024, and they are projecting 24 billion for next quarter revenue, which is a 10% growth over last quarter. So their growth is decelerating a little bit, but if they kept this growth, they'd grow by like 45% over the course of the year. But I don't really think that's going to happen. Their revenue probably will drop some. If they're decelerating this quarter, they'll probably decelerate again next quarter, and especially with some probable pull forward demand, they might even decline in revenue. Let's go over to my discounted cash flow calculation on this guy. So here I've got my spreadsheet that I created, and I have Nvidia pulled up here. You can see their key metrics. Their return on invested capital for 2023 was only 12%, but that's because it's 2023, and back last year their profit margin was actually lower at only 15%, whereas this year it's much higher. So for 2024, the estimates were for growth of 440%. So we are using that as our first number. This earnings number is our first number in our discounted earnings model. And then our 2025 estimates are for 55% growth. So that's what I put in for growth. And then after that, it's all up to us to see how much we think that Nvidia can grow their earnings each and every year afterwards. So 2025, I have them growing at 30%, 2026, 2010, and I think these are actually pretty optimistic numbers. Based on the cyclicality of the chips industry, I really don't think that they're going to keep doing 30, 20, 10. I think one of these is going to be negative actually, just because of the cyclicality. And then maybe we get up to like 40. But I don't know, maybe on average this is a fairly accurate representation. Maybe we could do like 5 and 5 or something. And terminal growth of 5% as well. Because who knows, maybe they come out with another chip and they can continue to grow over and above inflation. I have a discount rate of 10% as well because I want to earn 10% on my money for every stock in my portfolio. And with all of these assumptions, we can say that the fair share price of Nvidia is $393, which is about 50% lower than its current share price. So, not going to be buying at these levels, that's for sure. I think that we are in kind of an AI bubble. These growth projections are pretty high, I think. I'm not quite sure that they're going to be able to hit it, especially with the pull forward of demand from the AI hype. But we'll see. If you guys enjoyed the video, hit that like button. Otherwise, that's it for me, and I'll see you in the next one.